All right, we're over 40 days into the new year. The Seahawks absolutely flew away with the Super Bowl, and the markets have hit some turbulence, we'll say, after a strong Q4 run in 2025. Gold and silver got absolutely smacked down after hitting all-time highs, and the S&P 500 just can't seem to hit any meaningful stay above 7,000. So a lot of projection for that this year. We'll see how it goes. Still, 7,000 was a new all-time high for last year or early this year. I think it hit early this year. We'll see how the markets go. A lot of speculation around that. Mortgage rates are actually holding pretty stable around the low sixes after basically declining steadily for the last 12 months. So that's great news. As I always say, stability is a good thing. We need a little bit of that right now. I would say overall what I've been hearing, market outlooks for this year based on some expert projections and a couple reports, overall looking positive. We'll see how that plays out because as we all know, over the last 6 years now, things can just change on a dime and all of our expectations go right out the window. So overall though, I would say I expect a fairly good year for real estate. It's not going to be back to what I would call a normal market, but I do expect this year that we're probably going to see some pretty solid numbers, a little bit better volume. I think there are more buyers and sellers that are getting back into the market that really are looking to put a sale together and finally make a move that they may have been putting off for, in some cases, many, many years. I don't have too much to report on this time, which is actually kind of nice. I'm sure we'll have a lot more news stories and information to share next month. So for right now, let's just jump into the Sacramento data. Tri-County area, that is Placer County, Sacramento County, and El Dorado County. The number of properties for sale, and this is the January data. So this is the change from December to January. So in January, the properties for sale increased by 2.6%. Not a huge change, but that is a positive number after declining for the winter season. I would say overall, it's just an indication of our potential seasonal shift coming. Pendings increased an impressive 23.9%. So after the first of the year, that shows a lot of buyers jumping back into the market, putting sales together. That also shows sellers getting reasonable, maybe negotiating a little bit more than they wanted to initially. Maybe they just decided, let's get it done. Let's put it together. Let's negotiate. So that's great news. And because those sales data is lagging by about 30 days, this increase in pending activity next month, when we get our February data, that should translate to an increase in sales activity, which would track with our normal seasonal trends. With that, sales declined in January by 33.5. But again, that's lagging. So that would basically be all of the pending and market activity from December translated to a really low sales volume in January. Again, should pick up for February info. We'll see how it goes. Days on market increased 6.7%. So went from 60 to 64 days. That's kind of slow based on what we've been used to the last, 5-6 years. But in general terms, previous to that, 2 months as an average, that's not bad. I remember when it was taking, on average, it was taking 90 to 120 days to get a listing sold. Not horrible. We just need to adjust our expectations and adjust for different trends in the market. The list price to sold price ratio held stable at 96%. And this is the 6th straight month at 96%. So what that tells me is even though we have other fluctuations in market data, sellers are still just overpricing their listings for the current market. That could start to change. That's a combination of things. It's sellers maybe have some outdated expectation of what homes are selling for right now. Buyers are being very limited by qualifications, by rates, by monthly payments. So there's just that 4%. And on average, obviously, there are some that, they sell for 15% less and it takes 6 months. There are other homes like one that I just toured a month ago. They listed at $750. They ended up selling for $901. That's a huge jump. So there are exceptions, but on average, there is a 4% gap between what buyers can pay and what sellers are willing to take. We'll keep an eye on that trend. The median sold price in the Sacramento region Tri-County area actually dropped by 2%. So again, those sold value indicators are kind of lagging by 30 days. That was the December number. We'll see how things change. So it dropped by 0.2% down to 571. So not a huge change. And like I said, I expect that to turn around as we get more into our spring season. And once all the pendings from January turn into solds in February. So the average price did also see a small decline. So both of those moved in conjunction. The months of inventory. So I'll explain this one. The months of inventory jumped a whopping 55.7% from December to January. So it went up from 1.8 months to 2.8 months. And that is a combination of things, since that is based on the sales absorption rate. The increase in inventory that we saw after the first of the year, coupled with slower sales numbers, really caused that to spike. I think, again, as we see the pendings turn into solds, and that sales activity rate increases, then that months of inventory should start to pull back. We'll just watch the February numbers. Right now, I'd say all the stuff is really tracking within our seasonal trends. The difference, and I'll talk about this after the Placer County numbers, but we do have different micro trends. Overall, each year we see similar trends, but that can change. So we'll talk about that. Moving into Placer County, the number of residential homes for sale increased by a modest 3.3% for January. Pendeds jumped by 25.2%. So again, a lot of buyers getting into the market in Placer County. The number of solds dropped by 34%. So I think we just saw a huge fall off in Placer County for sales volume for the holidays, which is totally normal here. I would say we do see Placer County swing a little bit higher and lower on certain trends. So what I do expect is we're going to see a huge jump in Placer County in the February numbers once everybody has jumped back into the market. Those lag, we'll see what happens in February. Days on market did increase from 67 to 68, so not a huge change there. List price to sold price ratio actually improved in Placer County. So it went from 95 up to 96%. That's positive. That tells us two things. Either buyers are getting a little bit more motivated, or maybe sellers are being a little bit more realistic, or half and half. Who knows? But trend in the right direction for stability for housing in Placer County. The median sold price for single family homes declined from $650 to $625 from December to January. That is a significant change. Again, Placer County does see a little bit wider swing, so I expect that number is going to jump right back up over the next couple months. And the one thing that I do track is I look at our month-to-month changes, but I also look at our year-over-year trends and year-over-year changes. And while values can fluctuate on a monthly basis, overall for the last few years, they've been fairly flat on a longer term trend. So we'll see how things shape up for 2026. Inventory levels increased by a sizable 55.1%. So similar to the Tri-County area, it went from 1.8 months of inventory up to 2.8 months of inventory. And again, that's based on the sales absorption. So I expect that to start to shift. More sales volume happens, but we will continue to see increasing inventory really for the next 6 months. Overall, I'd say nice start to the year. A little early to tell where we're going to go. The one thing that I want to be cautious about, what happened last year, based on our seasonal trends and timing, we did see a really strong start to the spring season. But then I think all of the issues around the tariffs last year, the conversations around that, the fear about how that was going to potentially change things, really put a damper on our housing market for our spring season, what would have been a really nice, busy spring season. So we saw a really strong start, and then it just sputtered and died earlier in the year than it should have fallen off. So gonna keep a close eye on that. We're only 1 month in, things can change. I would say right now, rates holding stable in the low 6s. We got good affordability. On average, I am seeing reports saying that incomes are slowly starting to rise. That's gonna help with affordability. So I would say, if you're a buyer for right now, this could be a really good little window for the next month or two. If you're a seller, take this time, get your property prepped, have a plan, and be ready to be on the market within the next 30 to 60, 90 days at the most to take advantage of what is normally a strong spring season. And then in summer, things do tend to slow down just a little bit. So if you're a buyer or a seller, that's when you really have to make sure and negotiate the best deal. really pay attention to the details of the house and the numbers. And as always, you know, if you're thinking about a move, buying or selling this year, reach out. I love to sit down. I love having consultations. To me, the challenge of figuring out how do all these pieces fit together in the best possible way is really what draws me in. So I enjoy doing that. And I just love seeing people build stability, build wealth, and make the right decisions, get themselves educated enough to make the right decisions. So feel free, reach out. Love to have a chat with you. Like, follow, share with your friends, and thanks for sticking around. I'll be back next month with more data.